I feel like you're actually taking me down into the chaos of Wall Street right now, so I really appreciate that. What are you seeing? Tell me about it.
Absolutely. I mean, chaos is exactly the way to describe it here in the pit on the floor of the New York Stock Exchange. And we were here this morning during the opening bell, and we saw the major drop across the board, red all across the board. But we've seen this volatility, these wild swings. At one point today, the Dow was down as much as 1,700 points, and then it was able to swing back into positive territory, and then now, as we see, it closed about 350 points down. But I was talking to an economist a short time ago, and the thing that she pointed out is one of the reasons behind all of the volatility right now is the fact that there's no clear policy resolution or solution to all of this. Everyone's like waiting on pins and needles to hear what the president or the administration might say. And so it's kind of a wait and see. And so the data points of the economy itself, this economist pointed out, are still strong. I mean, jobs are good, companies and profits are doing well, but everybody is worried about what these tariffs could bring. So the big question is, what is the president and the administration going to do going forward? If the tariffs hold, like they say they will, although the administration says that negotiations are still happening right now with different countries, but assuming that they hold for the week, most of the traders and investors here that we've been talking to say expect more of that volatility and more of those wild swings to come.
Yeah, isn't it interesting, Whit, how we learn more about the president's plans, yet we still have all this lack in clarity throughout all of this. And we keep having these, conversations now about how the stock market looks as bad as it did during the pandemic. I'm sure there's a lot of people on that floor that can offer up that kind of perspective here of what it was like back then, especially now, as in this time of day, they start to look forward to the stock futures for tomorrow even.
And that's a great point, and that's exactly what people have been telling me. But the difference, though, during the pandemic is everybody knew what was wrong. It was the global pandemic. And as part of that, they also knew how to respond to it, right? Let's get money into the system. This is very different. It's very much a wait and see. So at some point, the market is gonna reset and sort of bake in this volatility. But in the meantime, it's a question of what will the administration do about these tariffs? And one consensus that we have heard across the board from a lot of analysts is that, look, these tariffs at the end of the day are going to impact everyday Americans, and the prices on the goods that they buy are going to go up. We've seen the likelihood of a recession, various estimates going up. JP Morgan, for example, increased the odds of a recession to 60%. We saw JP Morgan, also chairman of the Federal Reserve, saying that these tariffs are likely going to lead to increased inflation. So that has a lot of people concerned. But as we saw today, things did correct to some degree. It was not as bad as maybe people were predicting earlier this morning, but it's still going to be a long week ahead.
Certainly. They called it a manic Monday on Wall Street today, Whit, so I'm glad that you were the one down there for that for all of us. So good to see you, my friend. Thank you for being with us. I want to bring in Alexis Christoforous now for more on this. So, Alexis, I know you have the ability here to really look at these closing numbers, even some of those specific stocks that can really sort of paint a picture about what even tomorrow and the week ahead might look like.
That's right. If you look at just the closing number, Kana, on the Dow, off about 350 points, that does not even begin to tell the tale. I mean, this was a wild swing on Wall Street. We were down 7% on the Dow in the morning, up 3% before giving it all back. It was about $2 trillion worth of market value that evaporated in the matter of minutes. Just goes to show you how on edge this market is, just looking for any piece of news to trade on. You talked about individual stocks, specific stocks. When you look a little further into which stocks got beaten up today, they're household names: Nike, Apple, Home Depot. These are companies that do a lot of business overseas. There are some reports, unsubstantiated at the moment, but that Apple may be looking at sourcing its iPhones from India instead of China, because the reciprocal tariff from the U.S. on India is 26%, just 26%. I say that because the tariff against China could be as high as 54%. So you have these companies now scrambling to change their supply chains, to mitigate issues with their profits, with their bottom lines, to not have to pass that added cost on to consumers. But boy, oh boy, what a wild ride today, Kana. The biggest swing we've seen in the stock market in 15 years. The last time we saw something like this was in 2010 during what was called the flash crash. and that was a technical glitch that had happened in the stock market.
Oh, what interesting perspective you have there. And on that note, Alexis, and this is a bit of a tough question here, but clearly you see how the stock market does react to the things or even the possible decisions that are being made at the White House. Yet the president himself is sort of trying to brush off the stock market. At what point does the administration here have to look at that and try to make some decisions as opposed to, just taking those calls from major business owners and especially in the automotive industry?
Well, he's already getting backlash from some of his biggest supporters, fellow billionaires and longtime Republicans who are coming out against these tariffs, like Bill Ackman, who owns a hedge fund and just a few months ago said he was supportive of the president, coming out now and saying that this could be a self-inflicted winter of economic discontent, saying that these tariffs are a big mistake. J.P. Morgan, the CEO of Jamie Dimon, the CEO of J.P. Morgan Chase, coming out and saying, look, these tariffs are going to mean lower growth and higher inflation. And he's concerned about our relationships with other countries, our trading partners. Something interesting that Trump did do here during that press conference with Netanyahu is he pointed out a couple of positives, and he really seems to be glomming onto this. Oil prices are lower. Yes, they are, because there is concern that there's going to be a global recession and a slowdown in demand for oil. Oil now at its lowest price in about 4 years. And the knockoff effect is when crude oil comes down, it's a huge ingredient in gasoline, we could see prices come down at the pump. Also, he is pointing to interest rates coming down. He's really specifically talking about mortgage rates, which are now closer to 6%. And again, it's because so many people are getting out of stocks and moving to the relative safety of the bond market. I guess the question, though, is at what cost, right? I mean, yes, maybe you save a little bit at the gas pump. Maybe you're getting a better mortgage rate. But if home prices are sky high and it costs a lot to buy a car, are you really gaining anything there?
Right there. And now there's the question here also of new homes potentially costing even more because of some of those tariffs. Alexis Christoforous, our thanks to you as always.